Hello friends, welcome to our YouTube channel. Today, the second topic from the economic survey is deposit insurance in India. Why we are discussing this topic? Suppose there is a person A. If he deposits his money, say a 10 lakh rupee in a bank, he will be earning interest from it. Suppose what will the bank do? The bank lends this money to various customers on interest. So the bank lends this money to other customers. So if these customers failed to pay the loan amount to bank, then the bank cannot repay to A whenever the A requires. This situation is called a failure of bank. So when a bank fails, it cannot return the amount to its depositors. So what will be the situation? What will be the solution? What will be the solution for the depositors in such a situation? Here comes the Act DICGC Act 1961. The Deposit Insurance Credit Guarantee Corporation Act 1961 established Deposit Insurance and Credit Guarantee Corporation to look into this issue of failure of bank and a solution to the depositors. There are DICGC Act and DICGC General Rules 1961. Okay. Under the Act, the corporation is liable to pay the insured deposit amount to the depositors of an insured bank. That means the bank will pay Deposit Insurance Credit Guarantee Corporation to the Deposit Insurance Credit Guarantee Corporation a certain amount of insurance. Insurance premium will be paid by the bank. So when a bank fails, the DICGC will give the amount to the depositors, not the full amount, a certain amount will be given. Such will be given when the liquidation process is taking place. So it means a closure of bank, merger or acquisition by another bank. See, the deposit insurance, this insurance provided by DICGC covers all commercial banks, including payment banks, small finance banks, RRBs, foreign branches in India, local area banks and cooperative banks in all states and UTs. But you have to understand, the deposits in primary cooperative societies, the deposits in NBFCs, housing finance corporations or a corporate entity are not, the deposits are not insured by DICGC. So in deposits in these will not be insured. So when these entities fail, the DICGC will not pay the depositors. So this solution is available to these entities only. DICGC registers a bank as insured immediately and automatically when a banking license is issued to it. The deposit insurance premium is compulsory for all insured banks and is paid by banks to AGCC and is not recovered from the depositors. The bank will pay the insurance premium to this entity, but it will not be charging from the depositors. So the act came into force in 1961. The deposit insurance coverage began with 1500. So initially, whatever amount a person may deposit, if the bank fails, the DICGC will be paying only 1500. This is at the time of 1961. In 1961. Okay. Later on, the act got amended in 1993, and this 1500 amount has been raised to 1 lakh. This in Union Budget 2021, this deposit insurance cover was further increased from 1 lakh to 5 lakh per depositor per bank. So now the present amount of insurance cover is 5 lakh rupees. Here there is important data. See, 98% of total number of accounts. 98% of total number of accounts, that is 252 crore. Out of 252 crore accounts, 247 crore accounts have been insured by now. In terms of amount, the total insured deposit is 76 lakh crores. It is 50.9%. Up to March 2021, a cumulative amount of 5,763 crores has been paid towards claims since the inception of deposit insurance. Out of this, 5,467 crores were in respect of 365 cooperative banks. Only an amount of 296 crores for in respect of 27 commercial banks. So the concern is, there is a concern in the entire process. The concern is, even after the increase in insured amount, the concern is the RBI under Banking Regulation Act puts some restrictions such as moratoriums on withdrawals. Certain restrictions will be placed by RBI under Banking Regulation Act, due to which the depositors continue face difficulties and were unable to access their own money even to the extent of the insured value, despite a deposit insurance is being in place. So despite having insurance cover, they are unable to withdraw their amount. Such moratoriums will be announced by RBI. So now the Deposit Insurance and Credit Guarantee Corporation Amendment Act 2021 was enacted. The key features of this amendment is that introduction of interim payments. Introduction of interim payments means the DICGC, if RBI announces moratoriums or restrictions on withdrawals, the DICGC will make interim payment to those banks for whom any restrictions or moratorium has been imposed by RBI, resulting in restrictions on depositor from accessing their own savings. So a certain amount will be, suppose a depositor has 10 lakhs in his bank account, the DICGC may give permission to the depositor to withdraw up to 1 lakh. So a certain kind of relief, a certain kind of interim payment will be made by DICGC. And the second important thing is timeline for interim payment. So the interim payment has to be paid by DICGC, but in what period? A clear-cut timeline of 90 days was announced. A clear-cut timeline of 90 days was announced. See, within first 45 days, the insured bank must furnish the details of outstanding deposits to the corporation, and within 30 days of the receipt of the details, the corporation will verify the authenticity of the claims, and within 15 days from then of the verification of corporation must make the payment to the depositors. So within 90 days you will be getting the interim payment from the corporation. This is it for today. Thank you.